Mortgage spreads have been a very helpful thing for mortgage interest rates. That's the spread between the 30-year fixed rate and the 10-year Treasury yield. And mostly because there's been less rate volatility, banning our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop. It's KP coming to you live from Corona, California. Well, hope everyone got to manifest the dream over MLK weekend, the American dream, the dream of Martin Luther King Jr. It was a nice welcome break for all of us going into the new year. But doesn't it feel like the year has completely changed? Each of the last 2 years, since the December Fed meeting all the way to the September Fed meeting, there was a lot of uncertainty. There was a lot of changing, right? The winds of change are sweeping through. The days are getting longer. It's a new year. We can talk about, Mars is in retrograde or whatever. We get all that weird stuff. But bottom line is there's a lot going on, and we're in a midterm election year as well. And so, there's a way to talk about political initiatives without getting emotional. So I'll try and do that. And this will be a fun one, and hopefully a quick video, because I got to catch, it's 9 o'clock. I got to catch like a 7:45 a.m. flight out of LAX going to Miami. Going to go meet with some good folks over there at Totality, and we'll bring back some good information to our company, and brainstorm with some other executives. And then on Thursday, I'll try and get a video out. So in just 2 days, I'll try and get another video out from South Beach if I can. Okay. So the ADP weekly employment data came out today, and there's less jobs being created on a 4-week basis. And remember, if labor continues to weaken, then we will see rates continue to improve. However, we just went over a very big technical level on the 10-year Treasury at 420. So you can look at any charts. I like to look at the charts at MBS Highway, the good folks over there, Barry and Dan, everyone else. And rates have broken out of this tight range. They've been between 4 and 420, the Elon Line. And then they were in the upper end of that channel between 410 and 420 for quite some time. And they just broke out of it last week, and then now again today a little bit more forcefully. So what's going on? Rate sheet should be a little bit worse tomorrow. Now, remember, when you see basis points moves in the 10-year Treasury, it's not a like for like on your rate sheet. Obviously, the mortgage-backed securities is what you want to look at, and mortgage-backed securities moved quite a bit. Mortgage spreads have been a very helpful thing for mortgage interest rates. That's the spread between the 30-year fixed rate and the 10-year Treasury yield, and mostly because there's been less rate volatility. So if you're thinking things are very volatile right now, especially if you look at the stock market, I want to hearken back to the MOVE index. It's something that people don't talk about a lot. I do here, and go check it out. It's basically a volatility index of the bond market. So if you have seen the 10-year Treasury kind of move a lot in the last 2 trading sessions, does that mean that volatility has spiked? And so that's a good chart to go check out, MOVE. It's just called the MOVE index. And you can check out where the smartest people on Wall Street, institutional and bond traders, where they think things are going. They think this, isn't like the April tariff kerfuffle. We know that there's some tariff threats going back and forth between Eurozone partners and the United States. President Trump is speaking in the morning in Davos at the Economic Forum, and he decided to go all the way to Europe to talk about U.S. housing policy. Don't know why. Could have just said it here last week. Anyway, but, he is going to move markets. And I don't know, we've had enough time to see how he operates. Is this bluster? Is it, a taco trade? Trump always chickens out. Is he going to roll it back if the stock market gets hit too much? Will Treasury Secretary Scott Bessent, kind of say, hey, what you're saying maybe has made the markets go a little too far. But so far, the bond market is not volatile, even though we did see a spike in the 10-year Treasury. So what's interesting is the 2-year Treasury yield remember, is still a measure of like the short-term economy, right? So 10-year yield, we look at, to see how rates are kind of trending. But the 2-year Treasury yield, and of course, even yields under 2 years, you get a feel for where the shorter-term outlook is on the economy. And so the 2-year Treasury did spike up a little bit. Just you can go into MBS Highway and click on the little blue hyperlink under the 10-year Treasury to show more Treasuries. And it went up to 360. Now, that's still under 3.625, which is where the Fed funds rate currently sits. And that is indicative that we're probably in the right range for Fed funds rates compared to the 2-year. And also that there's not like this heightened fear of a recession, because typically the 2-year Treasury yield will come down even more if there's a true, real recession fear. So take a look at that. By the way, the Fed's meeting next week. The Fed, it feels like, what I talked about the void, that time between the holidays and how everything's just kind of like weird and time moves slow. It feels like, just yesterday we're having a Fed meeting and we were talking about, are they going to cut? Are they going to cut? Oh my gosh, they're not going to cut. They cut. But no one really expects them to cut next week, which is why really no one's talking about the Fed. So there's actual certainty there. We also had kind of this void period with the government shutdown where we weren't getting data. Some data never even came out. And so we're playing a little catch up. So the Fed's meeting next week. Their preferred measure of inflation is the personal consumption expenditure, which actually comes out Thursday. And I think it's just for November. So they're still playing catch up on that data, stale data. But remember, these data reports are 12 indices that make up the overall number. So 2.8% core PCE or 2.74, whatever the number is going to be. And so we're replacing November of 24, which was a very low number, with a number coming out this Thursday. But the numbers for each of the months after that, December, January, and February, are all pretty high. So if we just kind of stay in this PCE range, 0.2, 0.17, 0.21, whatever, we'll actually see PCE continue to come down between now and the February PCE, which remember doesn't come out typically when reporting is all good until the end of March. And there is a meeting in March. And then, so no one's really expecting cuts yet. And don't forget, there could be another government shutdown, which would then delay all of our data. By the way, I don't know if you can hear that. Like, I'm in Corona. There are these guys that go on this parking garage, like between 9 and 11 at night, and they just rip donuts on the top of this 2-level parking garage. It's actually kind of funny to go see. There's no one back here. We're kind of tucked back in this section behind a couple restaurants in an office park behind a Lowe's, and they just go ripping around. I don't know if you guys could catch that through the microphone. It was really loud. So as we go round and round, we're looking at data that's stale, and then maybe we'll come finally full 360, full circle. We'll get some data on a regular cadence, unless, of course, we have another government shutdown because we're not extending Affordable Care Act, also known as Obamacare, subsidies. And people are hurting right now with insurance. And so, I could see that deal getting done. So these are all things that are coming out. I could talk about the $200 billion of mortgage-backed securities, or the 50-year mortgage, or 401k. You could tap into that to get a down payment, or let's go, make the 1.2% of all housing stock out there from institutional buyers. Let's ban Blackstone. Not to confuse with BlackRock, which their chief investment officer for fixed income securities, Rick Reeder, is one of the shortlist candidates for the Fed, which we could have a Fed, chair announcement this week, Lisa Cook ruling, the tariff ruling of the Supreme Court. I don't need to talk about any of that because the news handles all that. So what I'm trying to help us think is, where are we going? Are we in this period where we're going to see elevated rates for maybe a few weeks? And it is possible. And so I'm just, I've been cautioning that for about a month on these videos, or maybe 45 days, that we could have seen the lowest of rates in this cycle. Remember, GDP is coming out as well. And that's, I believe it's just the final reading for Q3 GDP comes out Thursday. I think it's like 4.3%. That's a healthy economy. And so that's good inflation when the economy is growing. Even if 1% of that is from capital expenditure spending, on data centers, it still creates jobs, construction jobs, and all kinds of things. And so when there's good GDP growth, that's good inflation. Tariffs are typically a one-time pass-through. It's fun to finally read in the media that we're like freaking out in April about and you may have been guilty of it, and that's okay. I mean, people, bull markets climb a wall of worry, right? You may have been freaking out about it, and the tariffs that were imposed on basically every country around the world, and end up being a big nothing burger. And so, will this be the same in Europe? This battle for Greenland, and Kiev just got bombed by Russia, and there's they blacked out the electricity grid, and we extracted Maduro from Venezuela to take him to court for charges that were open against him during the Obama administration and also during the Biden administration. And then, of course, are we going to go to war with Iran? Well, I guess that didn't happen. Maybe it'll happen. I don't know. So, just don't worry about it. Just control what you can control. That's all you can do. If we do see this little bout of volatility and rates trend up, it's the same thing that happened last January and the January before. So we just got to work through this period. The good news is, regardless of where rates are, we're coming up on spring purchase season. And, other than Cleveland, which I read about got hit hard with snow, and I'm sure there's snow in other places, the purchase activity starts to pick up. And regardless of rate, I know we talk a lot about home affordability and, the down payment and how hard it is to get in a house. People still buy houses. I mean, they just buy a lot of houses. There's still a lot going on, with this abundance mindset. And so let's focus on what we can control and go out there and get it. If you catch a refi bid, great. If you get some equity loans, great. If rates come back down, we just started the year with 3-year lows in interest rates. By the way, I'm not a financial advisor. I'm not responsible for your losses, only your profits. We're right in the middle of earnings season. The heart of Q4 earnings season for stocks is starting to kick off. And of course, we had a nice little bout of volatility today. That is measured by the VIX, VIX. So if you ever want to see the volatility in the stock market, you can look at the VIX. Again, I'm not a financial advisor, but if the VIX spikes up to a high level and you have some cash, buy some good stocks and businesses that you think are going to be great. Typically, that's kind of how it works. Be fearful when people are greedy, and be greedy when people are fearful. Our retiree Warren Buffett, CEO and co-founder of Berkshire Hathaway. So, we're rolling into the heart of earnings seasons. We got a lot going on. Got a lot of data coming out. PCE is a big one, and just control what you control. That's it. Get back to you from Miami in 2 nights. Cheers.
Hey, it's KP coming to you live from South Beach. We are at the Totality event, executive roundtable, gracious hosts, 3 years running. Check this out. I was thinking whether I should actually do a video from South Beach or not, but it's so pretty at this hotel, one hotel. It's a little noisy. It's pushing midnight, which of course I'm West Coast time, so that's 9 for me. So it's Thursday. I'm trying to be disciplined and get my video out. So there's a little bit to talk about with GDP, PCE, and I think it's worth mentioning. So remember, the Fed's meeting next week, and they're likely not going to cut. And each of the last couple of years, we had some surprises in data, whether it be better labor reports for the January report, which comes the first Friday of February typically. And then we had spike in inflation. So what do we have going on? And then, oh, by the way, there's an update on the government shutdown. So look, PCE came out today, personal consumption expenditure, that was out. It was 0.16. And so the comp that it replaced from November of 24 was pretty low at 0.1. So that moved the needle. Even at 0.16, was super low, but replacing 0.1, which is even lower from 24, that it moved it up to, I believe, 2.8% PCE. So don't fear, because the next month is 0.19 and then 0.31 and then 0.45. So you have to understand, even if we're 0.2, 0.2, 0.2, or if we're also 0.16, 0.16, 0.16, you could see 50 basis points drop off that number, that PCE. So inflation's going to come down over the coming months. But will labor go up? Remember, Q4, it's always a lot of hiring. It's holiday season. We're a consumer-driven economy. And so a lot of times you see some surprise in the labor. I read one report today that said, from Mizuho, they said it could be 100,000, 125,000 jobs created in January. And if that happens and the unemployment rate goes down to 4.3, we could just be waiting a little longer for a Fed rate cut. Like each of the last 2 years when there was no cuts until September. And if it is what it is, that's what we got to deal with. So purchase money doesn't care about rate. 7 Ds, deployment, diamonds, diapers, debt, divorce, downsizing, and debt. So people are still going to buy. Now, there was a bill passed in the House, which also had Democratic support, that funded some parts of our government, some different parts of it. I won't get into the parts of it because it's extremely triggering, but the bottom line is some of the different appropriations are starting to pass different parts of Congress, and it's looking like we might avoid a government shutdown. This particular set of appropriations passed the House, which would continue funding until September. So if we don't have a government shutdown at the end of the month, then we'll have regular data get back on pace. And then the Fed and all of us that are watching what's going on with the world, who cares about mortgage interest rates, will have a regular cadence of data, and that's good. So the PCE that came out today was for November, whereas normally at the end of January, we're getting December PCE. So we're still a little bit behind. So government shutdown, good. Inflation, okay, decent. Labor, soft, but who knows what could happen. Now, Greenland and the Japan, bonds were all the talk this week. Now, what's interesting, if you watch the 10-year Treasury yield, what was resistance at 420, the Elon line, the 10-year Treasury pierced over it last week, and now it's trying to make its way back. But what was resistance is now support, so it seems. So we may be in this little upper band of a 10-year Treasury being above 420 unless labor weakens and brings it back down, or maybe Japanese bond yields start to come back down and calm the nerves. The Greenland deal is significant, right? Are we going to have military action? No, that's off the table. Did we roll back our tariffs? Yes, so there's no tariffs against Europe. And suppose it is a framework for a deal to be worked there. I don't know what that means. But the bond market eased, stock market rallied, pushing all-time highs again. I'm not a financial advisor. I'm not responsible for your losses, only your profits. So here we go, going into a weekend. What political event could happen? I don't know. Maybe there's a bombing in Iran once we get our aircraft carriers in shape. Like, it's crazy to think of all this stuff going on. So anyway, we'll look to next week. I did think it was, interesting that the government shutdown looks like it's going to be avoided. And just to take, the one before, these government shutdowns get weaponized for political reasons. There's really no political gain right now. The election isn't until November. Midterm election years typically go against the incumbent administration of any party. That's generally how it goes. So there's a lot of jockeying around, with executive orders and tweets and, just different things going on. And so, we'll see what happens. We'll keep an eye on it. It all matters. Have a wonderful weekend. I hope you can see this. Like, there's the beach right there. It's just beautiful spot. Want to shout out to Totality. They're absolutely incredible data partners to the industry. So many great products we got a chance to see this week. They just help us do more with our data. And let's get ready. We're going to go to the IMB in Amelia Island in a couple weeks, the Independent Mortgage Bankers show. It's going to be a fantastic show. And registration is open for Mortgage Innovator Conference for the California MBA. And all the shows start kicking off. So ICE Experience is coming out. It's always a great one. Mortgage Collaborative, Optima Blue. There's so many different things going on. So it's time to start traveling. I'm going to go back home tomorrow, hunker down, do a bunch of soccer and basketball and all the things, and then start hitting the road. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.